Management accounts, what are they? And what's the difference to annual accounts that are produced for Companies House? What's the fuss all about? Aren't they just another set of numbers? Absolutely not. I'm Kim Marlor from Krystal Clear Accounting, and I'd like to go into a little more detail on what they are and why they are a must for entrepreneurial business owners wanting to grow. If you want to be really successful, then you need to know your numbers, and you really ought to have management accounts because it will put you in control so that you know what's going on. They're not a legal requirement. Management accounts are effectively just for internal use, but they give real information on how your business is doing in real time, where you are now and where you are heading. They're not a replacement for your annual accounts. You still need to produce your statutory accounts once a year if you're a limited company to be filed at Companies House. But management accounts go much further and are produced monthly or at the very least quarterly. The format will be bespoke, whatever you need to manage your business. But it should at the very least contain a profit and loss statement, balance sheet and cash flow. Your actual numbers achieved, usually monthly, compared to your target, or often called budget or forecast, and often a commentary as to why the results are what they are. They will probably show some key performance indicators and maybe even a regular weekly or monthly scorecard as part of the pack. A lot of business owners go into business without any planning and sadly don't really know with certainty on a monthly basis whether they're profitable or not. They manage their business by looking at their bank balance, but don't really understand their numbers or the implications of the decisions they make. Management accounts really do enable you to know exactly what's going on, what you're spending your money on, and where the profitability is within the business, or not, as the case may be. It's a bit like driving a car. You wouldn't go out on a long journey without checking that you know where you're going. Filling up with petrol, check the oil, water and tyre pressure, and put the destination in the sat-nav. Checking everything before setting off and continually monitoring the sat-nav throughout your journey to make sure you stay on track. Well, it's the same with management information. You want to make sure that you know what is happening is actually happening and that you can make the right corrective decisions to go wherever you need to be. Management accounts can show whatever numbers and information you really want to track. As we've said, it would usually have a profit and loss, balance sheet and cash flow statement and a commentary depicting what's really happening. All the information would be measured against your annual budget or most recent forecast, so you can see at a glance what the variances are and what corrective action you need to take. The important thing is they alert you to what's going on, ideally each month, so that you can take corrective action to get back on track before you waste too much time, or worse still, go out of business, usually by running out of cash. They can be extremely useful in helping to formulate plans where you might need to raise finance. In any case, a lender will probably ask for a set of your latest management accounts to assess affordability criteria. They may look at your last set of annual statutory accounts filed with Companies House, but more often than not require your latest set of management accounts. Your management accounts are unique to you and will show the key metrics in your business that you need to measure. The key here is that they are tailored to meet your needs. We work with our clients to make sure that we understand and we capture what the key drivers are and the key performance indicators for their business. They very often contain non-financial data as well, like for example, number of website visitors. And you might have return on investment measures. You might measure new customers coming from various marketing pillars and the associated expenditure. So for example, a business owner might want to drill this down to how their Google AdWords campaign is performing, how many click-throughs, how many leads, quotes, and ultimately new customers, and the financial metrics around this. i.e. what each new customer costs to acquire. Management accounts are a great tool for the business owner to discuss with their accountant and senior management team if they have one. A management information pack will often not only contain financial information and tables, but also graphical information to easily see whether the business is on or off track. The important thing is to spend the time understanding and interpreting what the data is telling you and how you can use the data to make the tweaks in your business to correct when you have gone off track. It should bring the information and the numbers to life and make it easier to read and easier to spot trends. An early warning mechanism, if you like. So hopefully you've already worked out that the difference between management accounts and annual statutory accounts is massive. They are produced monthly or quarterly rather than annually. They can show your numbers in pretty much any format you like, as they're for your internal use. They're easy to read and don't have to have all the formal stuff like annual accounts do. You can split out any extraordinary or unusual one-off items below the line if it reads better for you. They have key performance indicators in. They are not just a balance sheet. It would be a P&L, cash flow, forecast and possibly some non-financial numbers. They can show numbers against budget or forecast and prior year. They are likely to contain a commentary on what's going on in the business. They stay internal to the business unless you need to raise finance and the funder or bank ask for them. Produce very quickly after the bookkeeping for the month has been done, so action can be taken and progress made. What are the benefits from management accounts? As I've already alluded to, it's an early warning system to alert you if you're going off track. That way you can take action to get back on course. Clearly a big benefit is to take away the worry and anxiety and enable you to sleep better at night, because you'll know with certainty what the profitability of your business is, whether you are meeting, surpassing or falling behind on your plans and targets, and will you run out of cash and need to raise finance. A big plus is you can make a decision in real time, as you know where your business performance is at. Management accounts gives you up-to-date financial information so you can target certain courses of action. You've also got control because you're not waiting for the year end to see what your results are, or managing your business by watching the bank balance and just drifting along. Also, they will help you to track your progress against your plans and targets, so you know you're on the right line and not guessing, or worse still, keeping your fingers crossed and hoping. After all, what gets measured gets fixed. If you don't know where you are, how are you going to get to where you want to be? If you'd like to have a chat over a coffee, virtually or face to face, and to see what's possible, all you need to do is call me or one of the team on 0161 410 0020 or email wecare@krystal-clear.co.uk. I hope that's helped. Please subscribe to our YouTube channel so you don't miss any of the content that we release. Feel free to hit like and share, and thanks for watching.